Well, good evening, all. Ira Epstein, and here we are with your end of the day metal market wrap up for Monday, the 31st of October, Halloween 2022. I will be back in Chicago later in the week, so you'll get to see my pretty face. I go into what's called now a fairly quiet period. And the reason is between tomorrow and Wednesday, you're going to get all the traders evening up, getting ready for the FOMC announcement. And as you know, the big fight is, oh, we're there and the market's ready to go up. And after the Fed pauses or rates go down, after that for a year, the markets and the stock market typically goes up and the markets come back. That is all that you keep hearing about if you're watching and reading from Bloomberg, Market Watch, CNBC. I can go on and on and on. The other argument is we need to see that the data says that the jobs report, which comes out Friday after the FOMC meeting, and any other data shows not only the slowdown, but we get the slowdown in CPI. What we are seeing is report after report is showing that the economy as a whole is slowing down, but it has to translate into two areas for the Fed to get the message. And those two areas are going to be CPI along with jobs. If those two do not go hand in hand with it, you have a problem. Now, can one go without the other and the market starts interpreting that, then the other shoe will fall? Yes. That would be my opinion. So, are we getting closer to a bottom than we were before? I don't have an answer for that. I need to see the data. I don't need to hear what the Fed says on Wednesday. I know that's going to sound very strange to you. I need to see Friday's jobs report. If that report comes out strong, I know what you're going to hear. You're going to hear traders say, oh, the next one will show it. Well, that's all we keep hearing, but they don't show it. And when you look at the help wanted and other parts, you don't see it. Now, we're in the heart of earnings. You know that. And they're still coming out pretty good. But this is all about metals. So the story in metals, to a degree, has to be copper, because China is in a series of massive lockdowns again. It started off with a couple of large cities, and now it's really spreading throughout the country, and more lockdowns from Foxconn and so on. There's already plans. They're going to have to move Apple manufacturing elsewhere because some of the plants are going to shut down so much they'll lose 30% or more of their production. That's important. In the stock market, well, the market's anticipating all these reports, so you can't go by what that is. The dollar, a strong day. Currency markets as a whole down hard against it. So let's take a look if we could. First off, the hardest thing to do in these markets, in my opinion, is wanting to own gold when all you're doing is fighting higher interest rates from everywhere. It's not just the United States. So as long as this market stays underneath the 18-week average of closes right through here, to me, you got downside buys. You're looking for opportunities to go short, not long. That's how I read that. We then take a look at the bar chart. And on the bar chart, what you had is a bear market rally. The market did carry, as you can see here, from this point here, higher, and now we just broke through with today's action these past lows. So that rally came to an end, and it ended where it so often does. If you've taken my full charting course, I try to explain as best as I know how that there's a line in the sand on a chart, a neutral spot. Analysts, chart technicians like to look for those. I use the 18-week average. Some use a 20, some use a 21. Everybody's got their preference for whatever reason. Most of the people don't even know why they use what they've got. Somebody taught it to them that way. I went further into it, but that's another story. So suffice to say, you had a bear market rally to that number and you're slipping back right now. You're getting caught in narrow Bollinger Bands. They're narrowing in, which means volatility for the moment is going to come out of this market. So I'm looking for support against the lower bands, resistance at the 18-day average of closes. And in terms of momentum, what I'm looking for in this marketplace, and you can see it right through here, is as the market's coming down, where you're getting readings under the 30 level. When you get that, you're oversold. I'm not interested in doing anything in the chart. The gold-silver ratio staying under the 18-day moving average of closes. You can see that right through here as I lay this out for you. And That to me tells me that the bias is still favoring the silver market. And notice how it's still in an uptrend. You have the pattern of higher lows, higher highs, but you're staying and have been staying now for 2 sessions closed, and tonight you're back open, but you're under the 18-day average of closes. You need to stay over that to have a bullish bias, but you've got to clear the 200-day average, and that's what that is, to get anything going to the upside, and so far it's unable to do all that. I have the same type of issue. By the way, I want to come back to that. I think that's the 100-day average. That's the 200. I had them pointed wrong. I'm on my portable computer, and it's definitely not the big screens I have at my trading desk. In the copper, you have a higher high, lower low. Well, that just broke the back of this market. So what you now have, and I often do it just like this. I'll take this. I will come over here to my preferences, and I'll turn this to this. I'll make this come out in the red, pointing down. It's pretty easy. And now when I look at the chart, I just automatically now I got a higher high, lower low. There's no trend to set up. You're going sideways. The platinum got up to the upper band. How many times have you heard me talk about Bollinger Bands offering key resistance and support points? But there's a way you work with it. You have to understand what to do when you have an embedded reading like this, or you just get an overbought, oversold reading, and how you play it. There's a striking difference. I have a 13-part video series that teaches you how to do that. In any case, to me, the top was made up there. You're getting a pullback. You're overbought. I don't see a darn thing that should be done in that market. And in the palladium market, you're down to the lower band. Now, you made a run at it just recently, as you can see back over here. You tried to get down to it. You got as low as 118.97 and a half. You missed the band at that point. Now you're making a run again. You got today to 18.23, which was under the lower band. That is the first time you hit it. What are you supposed to do the first time you hit it? Well, you're not covering all your shorts because you're embedded, so you got to learn the rules with that. But you certainly are taking something off the table. And last, we get to the dollar index, which is stuck between the narrow bands. So you've gone from the upper band to the lower band, bouncing back and forth, no embedded reading. What is this market doing? It's marking time to get into the 2 reports that we have this week. The FOMC Wednesday at 1 o'clock. And then the jobs report Friday morning. I think the jobs report's actually the more important of the 2 reports, because I think the FOMC's baked into a 75 basis point hike. And what could Fed Chair Powell say? But they're data dependent. If the data shows that there's the weakening that they're hoping and they're thinking is coming, then they can decide what to do for December. But if that report is strong in the jobs data, no. December is going to be more or less, if it comes in very strong, it's going to be looking at still another 75-point hike. So you need to see what it does. And then, of course, we'll get to CPI a little later in November. Again, you hear me talking all the time about these Bollinger Bands. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software, so you can make your charts look the same way that mine do. It's that simple.
Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.